welcome back to the channel. So just going to do a quick overview of Graphite, who is they got a mine that's getting into production, I believe, or they're building it, but they've just teamed up with this company here, who basically had a big higher grade project in the ground. 25 years this was the initial feasibility study, I believe. 25 years at 30% graphite, which is huge. They got 11 million tons in the ground of graphite, which is world class. So they teamed up, they went 50-50 pretty much with Graphite, who've just brought the study out on the project. So it's 24 years, 500,000 tons per year, and they say they'll make about $832, so that's $416 million per year. So 500,000 tons, I think if they built this now and trying to sell that, they'll probably flood the market. They're going to have to wait until probably 2025 to 2030 for the demand to really be there for electric vehicles. So there's all this new technology, graphene battery, this battery, that battery, but right now in your Tesla, it's half natural graphite, half synthetic graphite in the anodes, and they can get that good enough, like 1,000 kilometers of range, and that's plenty. They just got to mass produce it, in my opinion. So this will be, yeah, so that's that. So they do have to raise $1.5 billion, I believe, the capex. 1.4, so that's got to come from somewhere. That will dilute the company's share price. And I'll just go back to Mason Graphite stock price. It was only at 20, before this I think came out, it was at 13 cents or 16 cents, which is a $20 million market cap, and they had 10 million in cash and 10 million in shares in Black Swan Graphene. So I'm not sure what Black Swan Graphene does exactly, but it's something to do with graphene. So Mason Graphite earns money in that. So it was basically below the money they had and the shares in the other company. So it's quite a no-brainer to buy it there, or the risk reward was very good. And if you were lucky enough to go at the bottom, you've doubled since then, and there's still a lot of upside with this. They will have to raise a lot of money, but they're going to be making 416 million. Well, they got a 50% share in $16 million per year. So fair to say this could go up, although I do see dilution, given the big capex there. Some other companies, and the problem is some other companies do a small capex and then do the next stage, but this project is the middle of nowhere pretty much, so they probably just have to go all in. So that's the nearest. They have to do a 70-kilometer power line, which, if you're just quoting in your head a 70-kilometer power line, that's quite a lot of money. Not sure how much that's going to cost, but probably quite a lot. I actually have shares in the company next to them, GEM. So they'll have a pretty high capex too, I believe, but who knows if they can piggyback off this power line here. That would be very good for them. I believe they were going to initially truck this to here and then process it. Because it was such high grade, 30%, it was sort of viable, but now they're going to move the concentration plant closer to there, process it all, and then truck it down here, I believe, and then goes to wherever it's needed. So that's the thing about this. Middle of nowhere means high capex. If this was here, it would be a lot better project, obviously. That's just obvious, like good location means low capex generally. So screen battery means only 5 million. They got about 1 to 2 million in cash. They were only about 3 million the other day, and give them a 50-50 chance to get in production. But come 2025-26, if we run low on graphite and it shoots up in price. So take in mind this figure was on standard graphite price of today. They'll get that much. But if graphite at this price, it's only about $1,000 for the graphite in your Tesla. So people can afford to pay more, especially if other things come down. So that doubles. Obviously this thing doubles, and people are short-sighted. So if that's happening at once, people just pay way more for the company, etc. Buy low, sell high. So no one likes graphite now. It's not in favor because it's years away until we need it. So that's what I've done, is just bought the companies now and just waiting for down the track. And see, there's like spikes here for no apparent reason. This company spiked the other day like 100% on a graphene battery announcement, which didn't mean much at all. And if you try to buy a lot of shares in this company, it's just going to shoot up anyway because there's no one selling it. No one's really buying it, no one's selling it. If you want to buy $100,000 worth, it's probably going to shoot up the price, I'd imagine. Yeah, so that's Mason Graphite, Nuvemon in Canada. So what I don't like about these companies is a high capex, because raising that money dilutes your share price and therefore dilutes your return. If you didn't already know, I'm very high in this stock here. This should have a very low capex. How do I know that? Because their neighbor, RNU, has already done the study with a low capex, only like 1 to 2 million. Obviously, it's not as many tons as this 500,000 tons per year, though they can do a low capex, which means less dilution to the share price. So RNU basically drilled out their project, got funding and everything like that, around 700 million now. This used to be a 1 cent to 2 cent stock years ago. Announcements come out, drilling gets done, and you get that return. I believe ITM will be drilling. ITM has 2 massive deposits which will put their resource up with RNUs. They just got to drill them out. They've already drilled them, it's there. So basically these targets, they've already been drilled. Helicopters flown over with a magnetic thing on the back, get a magnetic reading, and now they're just going to drill it more times. And what do you think they're going to find? Most likely more graphite. So they got this one and they got another one like this size or bigger. So 2 huge things that will put them at massive scale. So they can start off small because they're in a good location, and then they can, even when the demand sets in, they can obviously get bigger like everyone else. But they're at a bit of advantage I give them because of the location. Yes, and they also have a rare earths project. So rare earths, the electric motor of an electric vehicle is made of rare earths. If it's not a rare earth magnet motor, it's less efficient, so you need more batteries. So that's why we do need those rare earths, more efficiency. So it'll be a clay type rare earths for this, get out of the ground. It comes out with kaolin also. They send that to China, whatnot. So that's another project up their sleeve. And they got the graphite, so that's why I'm invested. And they're only ITM ASX 34 million. Always good to hear for the price, but I think that's around correct with 8 million cash. I was thinking, yeah, maybe they'll dip down, you get a lower, but who knows, announcements might come out next month when they drill, and you won't be able to buy them down here again. Or at least you think you won't, and then you're buying up here anyway. Then it could drizzle down, up and down, all the way to 2025, 26. But eventually, once it gets into production, those numbers will speak for themselves. And if you're getting a certain amount of money coming each year, it's definitely going to be a lot more than $34 million. So I'll leave it at that. Obviously, there's a lot of other good companies. I just put this one a tiny bit above the rest. Just go talk about BRC and the ASXs quickly. So this company has an operating mine in Ukraine, obviously stopped by the war. And then they got a big project in Africa. Pretty much the one in Ukraine, if that went into peaceful times, they could spend not much money at all and get that going. And they got the one in Africa also, which is pretty much they spend $200 million, and then they can make $200 million a year for 20 years. So that's that, and that's at today's graphite prices. If they shoot up like what happened with lithium, then you're going to see even bigger figures and even bigger returns. If you were to buy in now, not saying you should buy in now, it's not financial advice. Yeah, so they got this thing. It's not a JORC resource, but they say they have heaps more stuff there. This, not by the standards of Australia, but heaps more stuff there. Yes. So basically, a good project there. If the war turns around, I don't know if Russia takes over. Do they lose this? Not sure. But if that happens, they do have this one in Africa. So they have an initial one. They spend 93 million, so not much dilution. Get it going, get that per year. Obviously, a graphite price rises will be more, and then they can spend the rest and do the $200 million one and get $200 million a year or thereabouts. So 73 million, spend that much, and again they get the EBITDA of 195, which will make them quite a bit more than their price today. So the reason I think they're quite high, 76 million, is because they do have that working mine in Ukraine and the big one as well. They're all also going downstream, shipping the stuff from Africa to America. So they're not ridiculously cheap, but who knows, you might get them ridiculously cheap if the world freaks out, or you might not. So it's all a game. It is decently priced now, especially considering the upside. When graphite demand kicks in, if you share the opinion that we will just keep graphite in the battery because it's working now, and sodium ion will come along, but will still be improved lithium ion, so it should be around, especially for EVs. And the more we do something, the better we get. So the cheapest EVs will be, which meaning normally the raw cost of the material is the bottom dollar. So boring video, but that's it. See ya.